I am so pleased. I'm such honored to talk with you. How are you today?
I'm fine.
Listen, I want to bring up some kudos for you. We're going to talk about this during the presentation, but I went back and looked at some of our videos. I've had a lot of people ask about what we have with the forecast, how well it's done. So let me go to the current one right now, and let's go pull this up and take a look at the S&P now. So this is a current chart. You just sent this out, so I want people to know that today is December 8th, 2022, and this is a current chart. Charles, it looks like on your bottom, this is one of your bottom waves, is it not? It looks like the S&P has peaked again. Is that what we're looking at?
Yeah, I show this because for people who are still not convinced how cycles work, from top to top to top, from bottom, it's the same amount of days. If you look on the right side bottom, you see it's a daily chart. And you see it hits every top and every bottom. So now it topped again, and that's why for the last few days we saw some weakness. I bring that up for people who are still glued to their media, TV, newspapers, and try to figure out what's going to happen, because it's totally not the case. It's not important, because you see when the cycle tops, as you see the red one on the bottom, the market goes down, and when it bottoms, the market goes up. What else do you have to know? And I still urge people to buy a small book. It's not so much about cycles, but about how markets work, instead of spending all the time in listening to the news and trying to forecast what the next move of the market is.
Well, and of course, what you're giving here are entry points to get in and get out, and it's forecasting into the future. Now, we've been talking about some of the problems that are coming in the economy. Now, you can just see this. And I know that we don't talk about other works, but the liquidity from the Federal Reserve is just awful. It's like at one of the worst. They're taking liquidity out of the system, raising interest rates. And of course, when you do that, it just goes right along with your forecast. Is when you raise interest rates and pull liquidity out, it affects the economy and it affects the marketplace. So what is your cycle saying for the next 2, 3, 4 months?
Well, we're definitely going into a serious recession. That's one of the reasons why the bond markets are having this rally. Also, I think you have a Goldman Sachs commodity index chart. I think I sent it to you. And it has a higher 100% correlation with the cycle. And it shows that we're going to have lower inflation into February. That's why everybody starts to be positive. It's just a cycle, as people didn't know that the inflation would go up. The cycle says it's going up. Now it says the cycle is going down. And in the first quarter next year, it's going much higher than inflation. So we have to anticipate that, not listen to whoever says what, Ukraine, who knows what they're talking, crude prices, whatever. We have to be ready for another move up in inflation. And consumers should prepare themselves, think how to survive this. I have friends in Holland. Holland has an inflation of 17%, and they sent me pictures in blankets because they turn off the heating. I have friends that had a monthly a bill of $360 with 5 kids, and now it's almost $1,000. So it's serious. It's not that serious in the United States, but you have to think ahead how you're going to survive this.
So we've had a couple of really good videos where we talked about the fact that it would appear that the market was going down and we were going into a bear market. But of course, you have said time and time again that bear markets don't go straight down, that you have opportunities to make money within a bear market, but they're distinct cycles. Now, and we talked about, I'm going to say 3-4 weeks ago, we talked about that there was a time coming that you'd want to put your cash to work. And of course, on your work, that time came. And it looks on this last chart that we were looking on the S&P, you can see where it bounced back up. Is that bounce over with on that S&P?
It's too risky now, so we took a very nice profit, and we're out in cash again because the longer-term cycles are still down. This is not over, this bear market. Just for people who are not very familiar with bear markets, because they haven't seen much in their lifetime, like I said then, always intermediate bounce of 15% plus minus. And don't get drawn into it, say, oh, the bear market is over, because that's what everybody wants you to believe. Just, be careful. And the bear market is only over when the longer term cycles bottom, and that will take well into next year.
So this is not a buy and hold market for clients. And I'm a baby boomer, and a lot of my clients are retired. So this is money that they'll never get back. So the advice to them at this point, we talk to their financial advisors and find out what their exposures is to the equities, and maybe take some money off the table at this juncture. Do you think they have time, or have they missed that point with which to take some money off the table?
Listen, my work prefers to say when the top is there and the bottom is there. And in the middle, what happens is that if they take it off the table and then in the months, 2 months, there's another rally, they get upset because they should have sold it. It's a big problem. The best thing is to wait. As you know, we're waiting and waiting and waiting for our buy signal on the metals, gold and silver. That's where you're going to make back your money.
So, but the S&P, if you have money in equities, have they missed that? So at this point, we're kind of in that middle portion. So it's one of those places that we either trade at the bottom or we trade at the top. And
well, the best thing is still to lower your positions. It was a nice bounce for the S&P, and I would take off some stocks and get more in cash, especially again, because the problem is with investors, they always remember where they made money, where they didn't make money. So a lot of people say, I want to make my money back in stocks. Yeah, but what if you make the money in gold and silver? I want to make it back in stocks. And that's why they always miss the next bull market.
Yeah, there's other asset classes than just equities. So the metals are certainly, you've been talking about metals and waiting for this entry point. And I think that's coming. I don't believe we have the chart today on the metals, but we've been talking about that for quite a while.
Right.
Anything else you want to talk about this S&P? So you think that this down move is going to go down into February, but the bear market is several years long. Is that not right? I think you think this is going to continue for a long time.
No, I said the commodity index is going down, so inflation is going to be less into February, and then it picks up again. The bear market is going to continue probably into the third quarter of 23. We have a bounce. It's going to be till the end of the 30s. The early 30s is going to be a big problem with stocks.
The early 30s?
Yeah, I mean 2030s. It's going to be there's a huge crisis coming. You would say, why did you tell me? Just in case we don't speak anymore. There's a huge crash coming in 2027.
So in the meantime, we're going to be going in and out. So this is not a time to be aggressive, then, I'm going to guess, huh? You have to be paying attention is what we need to do. This is not a buy and hold market for a long time.
No, because it seems that people don't care about PE, price earnings, anymore. And what I try to explain is, if you go to your broker and you say, I have some money to invest, he says, well, the stock market goes up 7% on the average, which is true from 1900. The problem is, if you draw that line with an angle of 7%, we're still about 60% above that. So in order to go back to the average of 7%, you have to go 60% below it. So the slogan, buy low and sell high, only means something if you know when it's low and when it's high. Otherwise, you don't know what's high and what's low. So you really have to think and look at these things, and stocks are still very expensive.
So we have some jeopardy coming. So this is a time that you really need to pay attention.
I heard a very nice anecdote that explains actually how people look at markets. In the early 1900s, somebody told a friend, if you go to the movie theater, you see people coming out of the wall, and he had never seen a movie, was just starting the movie. So he went there, and all kinds of cows came trembling, and he got afraid, and he took a flashlight, and he opened the flashlight, and they were gone. So the idea is that when you live in darkness, certain things, images seem to be true, but they're not when you get into the light. And he says at the same time, you can have a big bunch of money sitting next to you, but because it's dark, you don't see the money. So we all in the dark, and we're all looking at images that are not the real way to approach financial markets. And that's why financial markets always repeat themselves.
Well, and Charles, honestly, for a lot of people, it's hard. There's a lot of advice on the internet. I mean, the internet's a blessing, and it's also a curse. There's people telling people what to do. You have this long track record of just absolutely being able to see what's going on, and people need to really start paying attention. Let's go to our next slide, because So this is the bonds. So can you talk about this one? Now you have absolutely nailed the interest rates. Now you and I talked in November of 20,
Right.
which was long before anyone else was talking about this. You said inflation's coming. You could see it. I could see it in the commodity. You could see it come into the pipeline, but no one was talking about it. You said the bonds were going to be. It was the end of the bond market. It was the end of the bond market. Get out of the bonds. But again, we get bounces along the way. They don't go straight up or straight down. So what are we looking at here, Charles?
Well, what we're looking at here is, first of all, the cycle topped when I think the bonds were like around 190, the 30-year, and it went as low as 121. And remember, we discussed that people never going to get in the lifetime the money back. I just showed a couple of things over here. First of all, the line on the top. Now, if you don't carry it away by the news, you draw a line connecting all the tops. Now, this is, I think, a quarterly, so every bar is a quarterly. And when it gets to the top, it sells off. Not so complicated, so don't get carried away with the news. Just look at the line. And the line on the bottom usually can make a parallel channel. Is then when it broke down, as is now, it really broke down, and we got an acceleration on the downside. Now, why did I show, I think, last week to my subscribers this chart? Because we have a rally going on, and if you take a look where there's a cross of these two lines, it's just below 140. So usually what happens, you can read it in every technical analysis book, it tries to test the line before it sells off again. So it's possible that we just try to test the cross of these two lines, and you get the same situation. Then people say, oh, the high interest rates are over. No, it's just technically testing the line, and then it sells off again because it broke below a support line that came down for I don't know how many years, 15 years, and that is not so easy to get back about that line. But also the top, I want to show that you don't know what happens in the economy, what's going to happen. You draw a line, and it's very simple. And when you're at the top, you have to get out.
Well, and this is a little confusing for people because this is an inversion. So what we're looking at here is it's going down below the line, which means the value of the bond is dropping. That means interest rates are going up.
Correct.
So I think what you're saying is that we're going to get a bounce where interest rates are going to go down a little bit, but it's probably only for a short period of time. Is that what we're looking at?
Yeah, we make this bounce back to the line, but I showed this that you don't need me always with my cycles. The very simple ways of knowing what's going to happen. But you forget because you're listening to why it's going to happen by people who make correlations that can be true or cannot be true. Well, it's so simple. It hit the line about 5 times, and every time if you would have sold it, you would have done okay.
Well, and this is telling us what is going to happen. So is there a timing function on here? Do we know how long of a window we're going to have on here?
No, there's nothing with cycles. It's just to show if you do the minimum of your work and technical analysis, you don't have to lose any money.
So looking at this chart, this is a current chart, is it not, Charles?
Yes. I think it's 1 week behind. I think we're now trading at 132. So we bounced from 121 to 132. And if it wants to go back to the where you see the crossing of the lines, it can go as high as 139. It doesn't have to go there. It can fail. But don't get carried away because this is a normal behavior. It goes back to the point where it broke below the support line, which is 139. And then the bonds sell off again and interest rates go up again.
So we have a little bit of time. So in my industry, I'm in the real estate business. This gives someone an opportunity if they've been thinking of refinancing or buying something, they're going to get a better interest rate here at this point in the next. They just have to pay attention, I guess. But we do have. It looks like we have a declining interest rate for a little while, so it's not a big window, but it's coming. So it looks like rates are going to come down for a little while. Is that correct?
Well, we have cycles. I don't know if I ever showed you that on the Fed funds. We predict very nicely the Fed funds. That's actually more important for people who are in real estate to know where Fed funds are going.
Yeah, and I think we've talked about those Fed funds. It doesn't look like there's going to be any pivot. That's the new word is pivot. They're going to suddenly the Federal Reserve is going to throw their towel in and reduce rates. There's nothing in anything I see that says rates are going back down. They may pause, they may slow down, but it doesn't look like they're going down again.
No, they're going to slow down. So you have a problem with real estate because the correlation is not so much the 30-year, it's more the shorter mortgage rates, and I don't see them going down.
Right. No, and you called that. So let me go to my next chart, and we've had a lot of calls on this one here. Now, I put this in because in May of 2022, you and I did a video, and you said that rates were going up, and you call, and it's really interesting is that the interest rate inversion inverted at this time frame, and when that inverted, it called the absolute top of the marketplace. And you had called that earlier, and this is an old chart. This came from one of our old videos, and you had said that the 10-year was coming down for a very short while, and according to your cycle, and it has followed exactly what you said. So it's been actually very remarkable.
Yeah, what you see on the left top, that says 9:30, so that's the 30th of September. And that's where the cursor is. And you see on the bottom, that's where the cycle bottomed. So it's not surprising that already in October, November, now December, bonds are going up. So you combine it with the other chart we showed where we have simply a line, and you see how well this works. You buy when a cycle bottoms and you sell when a cycle tops. Nothing less and nothing more than that. Now, you also know that we have a system that shows you how much is going up and how much is going down. So if you know the price where it's going and you know the time, it's a no-lose situation.
Well, it certainly is a good timing function. I'll tell you that we've used this very, very much. I've passed this along to my investors saying, look at you, there's a window coming like right now. So if you've got some financing to do, and we've been talking about this for 3 or 4 months because rates went pretty high in the real estate business. They've come back. They've come down almost a point to a point and a half, Charles. Based on your cycles, you nailed it. And we have people that have, they want to take some money out of properties. We've been telling them, well, wait, because we have a better window coming. And that was in May of this year, Charles. You were 5 or 6 months ahead of everyone, and you were able to predict it. It was truly, really, I have to give you credit for that. That was just outstanding. I have had enormous calls on Bitcoin. I know nothing about Bitcoin, but I know that you like Bitcoin because it's got a regular cycle, does it not?
But look how simple this is. On the bottom again, I got the cycle, and on the it hits every top and it hits every bottom. Well, it's so easy. And I said I like cryptocurrencies because there's almost no fundamental news. So it's all emotions and it's all based on our cycles. So you should not be surprised that you have this huge sell-off from 64,000 because the cycle topped. And I still don't understand what's so difficult about it. It's so simple that most people probably don't believe it because it's too simple. So I showed you this chart that you just sell when the cycle tops and you buy when the cycle bottoms.
Well, and you send that to me. Unfortunately, I'm not a crypto guy, so I don't pay as close attention as I should. But I'll tell you that an awful lot of people were involved in this because it went up pretty well, just like your cycle said. And I understand there's been $1 trillion in losses, $1 trillion in losses when that cycle peaked and coming down. And there's so much exuberance in the marketplace. They just can't wait for it to go back up. Can you give any advice for the cryptocurrency? Do we have another big pop coming here at all?
Well, as you see, the cycle is still down and it's cut off. I have to do some work to see when it bottoms. Again, people can get a 30-year free trial, a 30-day free trial, and then they update it. By the way, I sent you a track record. I don't know if you saw that on Bitcoin. I think we're up. I don't remember. It's something like 220% this year.
I'm going to show that because it's truly remarkable. Let me, for fun, let's take a look at this at this next slide because I think this is what we're talking about. Here's your strategy. Now, this is one that you sent me, and just Charles, this is your slide, so you might want to explain this a little better than I.
It shows on the left that Bitcoin is down 80% something. And on the right side, we're up 207%. It also shows, I don't know in this one because I don't do it myself, it should show every trade we did. I think we did like 20 trades this year. By the way, you have the same thing on the NASDAQ if you're interested. We up on the NASDAQ is down like 35% now, and we're up 85%. just based on the cycle work we do. And I cannot continue to say it's so simple. Just don't listen to the so-called pundits. They have no idea. Don't listen to the news, and just do the work, the minimum of the work, and you'll be okay.
Well, I have to agree with you. I'm going to tell you, Charles. It's, I have noticed that when a lot of the mainstream media, it's buy. They never
Yeah.
would tell you when to sell. They tell you that you should be buying. They're always telling you to be buying, but you have to trade sometimes. In my business, it's a little hard to trade in and out. You can flip things, but some of our clients have enormous capital gains, and by the time we pay the cost of the taxes and the cost of selling and reacquisition, we have to take some sizable losses before it makes sense for us to do that. Plus, we get tax advantages and we get cash flow. So lots of other things on a trading, but some of these equities, these other asset classes, just are so beautifully made to trade. Your system just works so great. Let me go to my next slide, because I do have another. I don't think I have every trade that you made, but I think this is your monthly on here as well that you put on, and how you did according to the Bitcoin.
I think this is every trade. I think there was not one losing trade. So I always think things are very simple. I mean, it's or the cycle works or it doesn't work. Now, as you know, I started this at Merrill Lynch in the mid '80s. Then I had my own firm. Then I retired, and then I did all the work for Goldman Sachs. And it's a pity that the small investor is looking up to these firms instead of really taking it seriously and following what they're doing, and try to figure out again based on the media what's going to happen, because the media won't tell you what's going to happen. They don't know, and if they know, they're not going to tell you.
Well, and it's unfortunately, when I do my talking around the valley and in the surrounding states, we talk about assets under management, AUM, with a lot of the big companies, because they want to keep your money. They never want to let go of your money. So it's assets under management, and they're more concerned with keeping your funds rather than really protecting you. And
Well, I can give you an example. I'm not going to mention name. A huge hedge funds that worked with me, and we were up like 80%, 90%, and they're up 9%. So I says, how does it work? I mean, you just buy and you wait for the cycle to top. And they says, well, our management doesn't agree with that because people are paying us to do something. I says, why don't you just go play golf? No, we have to do something. So they try to time it. They're too late to go out, too late to go in, and they make 9%. Should have made 80%. So this is what, and then they make commissions and management fee, etc., etc. So it's not an honest business, but it's very difficult to explain that to people, because they have so much public relations that it's very hard to go against it. But talking about being long and asset managers, my experience is, and it has even been proven by research, that if you work at a big firm on Wall Street, you want to make career, you have to be positive. It's better than being right.
That's unfortunate.
Yeah,
you're absolutely correct. And the problem, of course, is that you never know who to believe. So, and there's so much going on. You and I have been doing this for 10 or 15 or 20 years. So, and I've been following your work for a really, really long time. And you have an absolutely outstanding credit track record. So I hope that people listen to this. And I've always said that when Charles Nenner speaks, it's really your advantage to listen to what he's got to say. So I know in my business and in my personal portfolio, I've certainly taken advantage of a lot of your.
So this cryptocurrencies, you really, if you go to somebody who says when are they turning up, how much they're going up, if you cannot get an answer, just go and listen to what we write, because that's not the right person to listen to if he doesn't know what's going to happen.
I have so many people ask me about cryptocurrency. They just ask me about crypto, and it's really not in my wheelhouse. I'm an expert in the real estate industry, but cryptocurrency, I'm not. And I keep telling them to go just take 30 days of your newsletter and just follow it, and you'll be so much better off, because they're hearing all Charles, there's so much fraud going on. You saw where these big houses went bankrupt. They took the money out, and a lot of people are following this advice, and people get all excited, and it's more about selling the cryptocurrency or selling the metals than really about doing any kind of long-term investing.
Look at this Katie, what's her name? she had no fear, which was stupid. So she was in all these tech stocks, and she had a good name, and then it went down, and she lost everything. And she said the crypto is going to 200,000 or so. So I once, had people ask her, how do you know it's going to 200,000? She never gave an answer. Just you can go to 1 million, to 5 million, who cares? But people listen because she is in the news, so she must know.
Yes, they get touted in the mainstream media, and it's I have a lot of people come to me because they've had a lot of losses, and they're waiting for it to recover. So that's why we're doing this Bitcoin today, so that they can see that it's a pretty easy cycle, and if they pay attention, and it's a trading platform. This is, they keep saying it's a store of wealth. Well, lots of things are stores of wealth, but the wealth in this is pretty volatile, and it's got a regular cycle. So, gosh, it's just a great trading platform, if you ask me. So, but you know better than I'm not a trader myself. I also want to give you kudos because in my industry, I need to ask you a couple of questions. You told me that you sent this chart. We did a video in March of this year, and you said lumber's peaked, and that means that we're not going to be using lumber anymore. And you talked about Lennar, and you talked about Toll Brothers, and you said you can just see by what the charts are telling you that they are going to slow down pretty radically. And I'm going to tell you that was absolutely stunning forecast, because here in our markets, it's just come to like a complete standstill. No one's going into the new homes. And I'll tell you, when the Federal Reserve raised interest rates to 7%, it just like turned the water off. No one wanted to buy anything, and and the builders, of course, they're scared to death, Charles. They built all these homes. They were so careful not to overbuild. They were so careful to making sure that their buyers could qualify. So they built these homes. It took them a long time to get them, and their buyers qualified at 3%. And now the mortgages went to 7%. They backed off a little bit, but there's a huge difference between getting a mortgage at 3% and getting a mortgage at 6%. And a lot of them can no longer qualify.
And soon we go to 10%.
Exactly. So, what we're seeing is that the builders are pretty concerned, and they're starting to sell a lot of their homes have become spec homes. So it's a pretty good time for us to get some value in properties. But again, for us, this would be a very, very long-term hold, and it's not for you can't be worrying about the fluctuations. We've got tax benefits and we've got income, and that's some of the things that we look at and we counsel. But you were so correct on this lumber call. It was just amazing, and we're starting to see right at the very end here now. I think it was 127.23 is where the cursor goes, and it drops down again.
Well, it's close to a short-term low. I have very big clients. I said if lumber goes above 440 or 460, it's very close. Then you have another bounce. It's like you see, it's always the same system. You see those big two tops, and in between the bottom, just the computer figured it out. I always say, the system works, or if it doesn't work. If it works on everything.
Well, lumber, I got this yesterday, was 426. So it was like 390 or something last week. It was pretty low. But again, this is just a bounce, is it not, that we're looking at here? Bounce into the maybe first or second quarter of next year?
Yeah, it's just a bounce, because we're gonna be in big trouble. But you said yourself, if the mortgage rates go up a little bit again, who's going to buy? I mean, you pay a fortune on your mortgage.
Well, my concern, of course, is if we couple higher interest rates with a recession, that means that even if they lower interest rates, if your job is at risk and you're not working, or you don't have any savings left, or you've ruined your credit, they're not going to give you a mortgage anyway. So we're really concerned about we're trying to get our portfolios put together. Anything that needs to be sold, I think we need to sell here in the next, 2 quarters or so. But we also have this thing, Charles, that's that, not to tout my industry, but we have a lot of people coming over across our borders, and they all need a place to live. And if the builders aren't building any homes, where are they all going to live? I mean, it's really a problem. We're going to have more homelessness here, of course, but I think it's going to put pressure on rentals because there aren't a lot of places to live. I mean, it's an amazing combination. So we'll try and sort that out as we go along. Let me go to my next slide here, Charles. I'm going to take a look at that. And this is Lennar. We talked about this again in our video in May. Your words were real estate doesn't look too good like 2006, and I'm going to tell you, those are prescient words. You were very right on that. Any glimmer of hope on this? It looks like we're going to bottom the cycle. So when this cycle bottoms, we probably get a bounce, I'm going to guess, huh?
Well, this cycle, that's a very regular cycle. Again, I stress, look at this cycle. It's perfect cycle, and just watch these works and don't try to interpret what happens in the economy. But what I see is on the left top side, the cursor bottoms on September next year. So for the moment, we're not going to see a lot of good news in the housing market.
Well, and that goes with what we were talking about. This is a builder, and I know that the builders are in the real estate industry, but they are also building a product. So they're a manufacturer to a certain extent and a business. And I think their business is in jeopardy. So if we want to protect our portfolio, do you think there's enough time left in between now and the 23rd? But maybe we can put some puts or short the builders still?
Yeah, we talked then before it came down to buy some puts.
Correct.
And I think we're going to have, I don't have it ready. I think we're going to have some bounces in Lennar and Toll Brothers, and then you can buy some puts. But again, I have not everything in my head. So the best thing is just to watch the research, and then we show you the short term. This is a weekly cycle. What you need is a daily cycle. And if it turns up, then right at the top, you're going to go short or you buy some puts, and then you're covered. If the real estate market comes down, you make your money back on the puts.
Yeah, it'd be a great hedge. It'd just be a great hedge. So it's a great integrated asset approach on this. And if they talk to their financial advisor, and they can work those puts out. A lot of people don't understand puts or shorts or whatever, but the advice is absolutely excellent. I think because it's so hard for us to sell our portfolios. It takes a long time to accumulate these, but if you want to protect them, doing a hedge would just be just a very, very good financial decision. Let me go to my next slide.
I just want to mention that what you say here a lot, most people don't know about puts. Buy a book for 20 pages. Don't go and drink at the bar and look at the sports. So one evening, stay at home. It's worth it. It pays you back. And go over a small book about calls and puts. It's worth it.
Better that you personally know rather than depend on anyone else. It's so hard to find good advice. And everyone that you deal in business, they have a personal agenda.
Right.
So it's so hard to really get really good advice. So I agree with you 100%. Education is absolute key. You really need to be aware.
If you go to an expert to say, I want to go short Toll, he will tell you, oh, this is very dangerous. You know how much money you can lose? And then you're afraid you're not going short.
Correct. So when we do our seminars, we tell them that the very best financial advisor you're ever going to have in the world is the same person that looks back at you in the morning in the mirror. Because that's one who's got your best interest at heart, is that guy looking back at you in the mirror. I agree with you. Get educated. Do you remember what book they should buy? I know you talked about doing Elliott wave analysis. Is like
that's something else. But just for the puts, I don't know. There's so much on the market. I think if you Google, it's already enough.
Oh, okay.
If you Google what are calls and puts, and you print it out, I think maybe only 10 pages. You're prepared.
Well, I think that's a wonderful idea. I think that you can't go wrong knowing what being educated. Again, this is from our video in March. You were talking about that the global economy was going to soften up because you could see it on your chart.
Right.
And at that time, so I put these numbers in on March 3rd when we were talking. The copper was at $4.93. And yesterday it was $3.84. So that's what, 20% drop, 20% decline in 6, 7, 8 months.
Just talking about puts, if you would have bought the puts for almost nothing with a strike price of 4, you would have made a fortune.
Yeah, of course. Yeah. Yeah. So there is just and this is a long-term trend. So
Right.
that was 11-18-22 is where the cursor is, and yet it goes down. We get a little bit of a bounce, but then it
Yeah.
continues down into 24. So are we talking about a fairly long recession here, Charles?
Well, they call copper Dr. Copper because it usually is the best indicator. And according to the cycle, this is a very bad situation for the economy.
Well, copper is used in absolutely everything.
Yeah.
Well, everything manufactured industrial. I mean, everybody's using copper. So, and this chart is a long-term chart. So that goes well into 2024. So we've got 24 months of at least of a pretty tough economy.
Well, I don't know what happens. I had to cut it off somewhere to get it, the right format. I can do it till 2040. The cycles work for another 20 years. So it's possible this is not the low what we see over here.
Oh, goodness. Well, certainly time to pay attention. There are times to be aggressive. There's times to be conservative. This would seem that this is one of those times to save your money and be conservative. Would you agree?
Yes, but again, this shows you don't always have to make money in the stock market. You can make it in anything that we follow. And the huge moves over here, like you see. So if you're a little bit learned in finances, you don't really have to worry about what's going on in the recession.
Well, there's always a bull market somewhere, and of course,
Right.
there's two sides to the trade, is there not?
Yeah, but what I said is, if I know people who want to make their money back in gold already for the last 40 years because they once did it in gold. So they're waiting till it goes up, because in the meantime, your money is worth less and you're just sitting and waiting. Why don't you try something else? No, it has to be in gold. So that's the problem. The insiders know in which market the next big move is, and you have to be flexible and not say, I want to make it only back in the stock market or only the bond market. If it goes in the oil market, we work a lot with USO, as you know. That's I think it's an ETF for crude. I don't even want to talk that it goes to the roof, the track record of USO. So you can only do USO, go long, go short, and you're settled.
This is a weekly. I don't know how long a chart. This is an old one. This one came from, again, I think one of our earlier videos. You sent this out, so I want to review it. So the cursor says 10, 21, 22. Oh, so this is a fairly long chart that we're looking at. Is that not?
Yeah. So it showed a bounce. There was another bounce. I don't know when the cycle tops again on this chart. Somewhere, I think this was October, probably in December or so. So the cycle is down till the end of the months on the crude, and then next year the crude should pick up again.
Well, I saw crude drop down to $72 a barrel.
And as you know, maybe, I don't know if you look at the research, a price target was just below 72.
That's pretty amazing. That's pretty amazing. So we're pretty much at bottom. So
No. If it breaks 72, it can even go to 65. So
really?
You just have, so as
Wow.
long as the cycle is down, anything is possible. So if you never go to the cycle, Marty Zweig, maybe people remember him. He always used to say, "Don't fight the fight," and I say, "Don't fight the cycles. Don't fight the cycles." So just wait till the cycle bottoms, because then almost nothing goes wrong. We'll see how high we go, but first the cycle has to bottom before you buy.
Well, so a little good news. So at $72, we're going to start seeing diesel come down a little bit. We're going to get a little better on our gasoline. So that's a little Christmas present for everybody for the holidays, but only for a few weeks.
Yeah. And that's interesting, because you can combine that what happens in Ukraine. It's kind of quiet relatively. Why? Because if the crude goes down, Putin doesn't have as much money as when the crude goes up. So wait till the crude goes up and the billions start coming in again, then he has money to do whatever he wants to do. So these things are really connected.
They're amazingly corrected. You can make some extrapolations. The reason I used this was because this is, again, one of the older charts that you gave us, and it was absolutely correct. If you just follow this, you would know that oil was going to be declining. So if you wanted to fill up your tanks for the wintertime, a lot of people use heating oil and stuff, you would know that prices are going to be coming down. So just on like the average household can use this. This is, Charles, been wonderful for you. I've had questions from very, very just very, very smart people. They've been asking just quickly your thoughts on the dollar cycle. Now I know you pegged it exactly. What you had a 113 top. It went a little bit above that, and then it's come down from there. So, what do you think on the dollar cycle?
Yeah, it went to 114 and then it came down. And as long as there's no close above 1078, the direction is down. It will go up again. Again, I don't remember exactly what the cycle looks like. The war cycle, I remember the next cycle bottoms the middle of next year and it's going to be a big mess. The social unrest cycle, which is a 60-year cycle, which you maybe remember the last time it started going up in the 60s, is just starting. So we're going to be full of social unrest, and it's going to be a very difficult time. And if I may give my input, there is the same thing happens before every world war, the First World War, Second World War, the combinations being made. And I think the combination is Iran will go against Saudi Arabia, North Korea will go against South Korea, Taiwan is going to be taken over by the Chinese. And then the NATO is so busy, so then Russia's going against the NATO. And I think United States will not know what to do because they cannot spread out that much. And I think they will even stand aside, and this is going to be a huge problem because it's going to come from all sides. People still don't realize in the politics what's going on over there. And I just wonder why they don't realize what's going on. But in the First World War, they didn't have an idea. In the Second World War, they thought it was peace with Hitler. The history repeats itself. Now, I have said this, and my wife says don't always repeat that, but I repeat it one more time. I don't know if I said it in your program. Just before Rome went under and it was burning, the angels, the senators had discussions for weeks if angels are masculine or feminine. Did we discuss that once?
We talked about that once before.
Yeah.
Yes, it's
and that must. And if you see what we're discussing right now, who's a man, who's a woman, isn't that interesting? The world starts burning, and we're discussing the same problem. So, if you know a little bit about history, you know what's going to come.
Any thoughts as to what the average household should be doing, Charles, to protect themselves?
Well, they asked me, where should you go? I said, thank God I'm married to a Brazilian wife. I'm in Brazil now. I think Brazil is going to be out of the danger zone, especially if you go too low. There's not much you can do because it can come from all sides.
Well, it looks like we're going to have a pretty big combination. We've got an economy that's slowing down. We have interest rates that are going up. We've got inflation that's coming along. And we've got social unrest, which is a function of all that. So when you start being concerned about your job and your kids are, need shoes and they need to eat, nothing sets people off more than those kind of problems. And combine it with the geopolitical, I think we're going to have a very, very interesting next year and a half, 2 years, 3 years, 4 years. So
the good thing is my professor in psychiatry used to say, when you're chased by a lion, you don't care if your hair looks good. So a lot of personal problems will disappear because you're there for survival. So that has a good side also.
So I would say we probably need to get out of debt, build some reserves, pay attention to your finances, pay attention to your job, put some cash at home. Would you say to have some money at home rather than in the banks and some extra food and water?
I understand because I read it. I wasn't there. That in the 30s, it took years and years and years until the government paid back the treasury bills. So it's not so simple. I have the money. The countries where you cannot touch your money anymore because the situation is so bad. So I don't even know what's going to happen with that one. That's probably why people like Bitcoin. I don't do anything with Bitcoin. It's too complicated for me. But the fact that you have the money doesn't mean that you can use your money. So you have to be very on top of what's going on in politics. They even want to now make a digital dollar. So I even know what to say. I don't know what to do.
Well, let's pay attention, I guess, and we'll just do the very best we can. But I don't think there's anything wrong with getting out of debt, building some reserves, having some food and extra water at home, some cash at home, being very, very careful with what you're spending.
Yeah, but look what happened to the students. They got out of debt, and then there was a forgiveness. Maybe it's the good bet. If the world goes under, who cares? You paid back, you work day and night to pay back your debt, and there's no debt because everything is destroyed. The system goes down. So, I mean, it's not that simple.
No, it's not that simple, but we need to do something. So I think that we need to pay attention more than anything else. So, and look at you. Here's your new website.
Yeah, I had to do it. I had to pose for these pictures, which I really don't like.
So we've talked about this. You've mentioned it a couple, 2-3 times. That I'm going to tout it a little bit. If they want to get a free trial, you actually even have a button on this now. If they want to get a 30-day free trial, they just have to go to charlesnenner.com and just push the button. I think it's probably the best 30 days you're ever going to have. And I can't help but think that this is something that everyone should do, particularly with all the volatility. I mean, this is just, you and I are the same age. I don't know that I've ever seen a marketplace or economy or a world that is as complex as it is right now. So wherever you can get a little bit of insight, I think you're better off. Anything else that you'd like to share today, Charles?
No, just don't tell the Russians that you're going to push the button.
Oh, God. Yeah, we certainly don't want that. Well, Charles, thank you so very, very much for coming with us.
You're welcome.
My very best for you. Happy holidays that are coming up. I don't know if we'll be able to share before. We should maybe talk about doing something in the new year, doing some New Year forecasts again. But this was wonderful. Thank you very much for sharing your thoughts with us, and my very best to you and yours.
Happy New Year to everybody. Bye-bye.
Bye-bye.